Hello everyone. In today's class, we will discuss auditing. That is, majorly we will focus on vouching. That is meaning of auditing and meaning of vouching and definition of vouching, objective and importance of vouching. All this concept we will cover in this class. Simple, it is examination of books of account to check the accuracy of financial statement, and or else audit is the examination or inspection of various books of account by auditor, to check whether all department are following rules and regulation or not, whether all department are following document system of recording transaction or not. Like that he will check. That's how this audit work. Then definition, that also we have seen. According to Spicer and Pilgrim, that is, they define auditing as an audit may be said to be such an examination of books of account, books, accounts, and voucher of a business as will enable the auditor to satisfy that the balance sheet is properly drawn up, so as to give a true and fair view of state of affairs of the business, and whether the profit and loss account gives a true and fair view of profit and loss for the financial period according to the best of his knowledge and explanation given to him and has shown by the books, and if not, in what respect he is not satisfied. That is, in simple, this definition tell you that he explained that audit is examination of books, that is books of account, as then transaction, okay, books, transaction, accounts, and voucher, that is documents. Voucher, he will examine all these three things to get to know, that is, of a business, as will be enable auditor, that is by doing this one, by examination this one, auditor will satisfy himself, that is, the balance sheet, that is financial statement, balance sheet, as well as profit and loss account, whether they are true or not, whether the balance sheet of company is true and fair, whether this balance sheet is providing true picture of business or not. Okay, that is the true and fair view of state of affairs, that is the current state of business, whether this balance sheet is showing the current state of business or not. That he will check by keeping books, by examination of books, accounts, and OSHA, and as well as by also he will consider profit and loss account. He also examine profit and loss account to check whether the true this one fair and true and fair view of profit and loss account for the period, that is for 1 year or quarterly, that is financial statement, that is he will check profit and loss account, and he will check whether they have provided accurate information regarding profit or loss incur, okay, whether how much profit they have won, whether they have shown correctly or they have increased that one, or any accountant have done any window dressing. Like that he will check. He will check by keeping books, by examination of books, accounts, as well as vouching. By using this one, he will check financial state. Coming to vouching, vouching means examination of documentary evidence to ascertain the accuracy and authenticity of transaction recorded in the books of account. It is the technique used by the auditor to judge the truth of entries appearing in the books of account. That is why vouching is examination of document evidence. In vouching, he will examine documents evidence, whether because he want to check accuracy and authentication, that is he want to check whether this transaction is really occur or it is falsely made, or else it is any fraud is happening, that is maybe duplicate vouching also, maybe management will prepare no worker, so he will check whether this is accurately or authenticity, he will check, that is it is true or not, that he will check under vouching. It is a technique where auditor will judge the truth, that is by using this one, by verification of documents, he will check the accuracy of books, okay, that is the transaction in the books of account, the transaction what they have made, he will check each one by one, he will check whether for all transaction they have proof, that is they have voucher or not, they have physical evidence, they have documents evidence or not, that he will check. That is known as vouching. Let's see a few definition for vouching. According to Lawrence Dixie, vouching is an art of comparing entries in the books of account with documents evidence in support thereof. That is, Vouching is an act, that is, it is a process where you will compare, that is, entries, that is what you have made under books of account, with documents evidence, that is known as vouching. That where you will compare the documents evidence with books of account, that is both are matching or not, that is known as vouching. According to RB Bose, vouching is the means verification of the authority and authenticity of transaction as recorded in the books of account. That is, vouching is verification, like previously seen. That is, they will compare here. It is just like verification. In simple, if you gone through both definition, means it is suggests both. It suggests simple, in simple word, it is vouching is an act of verification of books of account by keeping documents. Any difference between routine checking and vouching? Routine checking means it includes checking of cash, that is where you have posted, what entry you have posted, and carry forward how much extension and other calculation in the original entry, that is under general what you have made it, and you have to check. Okay, periodically you have to check, maybe it is weekly or monthly or quarterly. What you will check, periodical checking of your transaction, whether you are recording true, whether, that is checking and try to establish genuineness, that is true of record, whether you are following correct system, or whether you are posting in correct manner. Okay, casting are correct, posting is correct or not, that you will ascertain under routine checking. What about vouching? In broadly speaking, vouching includes routine checking, that is this vouching includes routine checking because it is one of the part of vouching. Routine checking is one of the part of vouching. Both are important in their own way. Vouching is checking of entry, while routine checking is the checking of casting and posting. Okay, where you have posted and how you have treated that transaction, that is known as routine. Okay, periodically you have to check, but whereas vouching, it includes routine checking. Under vouching, where you will check periodical, you will check as well as by keeping documents verification, by using evidence as the documents, you will check each and every records. That's how this vouching works. However, hence there is nothing, okay, there is no difference between both. However, in routine checking, arithmetic accuracy, that is amount, you will verify. Whereas under vouching, you will check with the help of documents evidence. With the in vouching, you will check with the evidence. So by keeping documents as a base, you will check each and every transaction, that is known as vouching. Whereas routine checking is periodical checking, where you will keep arithmetic accuracy, that is numerical value will check. Objectives of vouching, first will be to detect errors and fraud. All transactions are to be supported by evidence. Okay, so auditor will check each and every transaction. He will check the authentication, that is authorized, whether authorized person have signed on that transaction or not, whether that voucher includes the authorized person, okay, officer sign or not. By seeing that one, he will detect, he will get to know any fraud is made under books of account or not. By doing this one, he will detect errors and fraud. So vouching, one of the major objectives why we will do consider vouching, because we want to detect errors and fraud which is done in books of account. That is, planned fraud can also be detected. Okay, under vouching, if any fraud is made, that also can be detected by using vouching. To know the truth of account, each and every transaction is checked and rectified on the base of support documents. That is, to know the truth of account means, if you check each and every transaction with proof, means you will get to know if any extra anything made, means you will detect that one. By doing that one, you will get truth of account, that is, you will get true value, that is true figure of your business. Then another objective, to find the unrecorded transaction. By checking your documents, if you find unrecorded any documents, that also you can add. By checking each and every record transaction, you will compare, no? If while comparing transaction with documents, if you find out any documents which is missing in your books of account, that you have to add it. By doing that one, you will get unrecorded transaction, and you can write down, okay, you can rectify account. Then to know that all transactions are authorized, that is while checking each and every transaction which evidence, you have to check this one documents. Under watching, you will check whether if you have paid someone, that is supplier, 10,000 rupees, means you have to check whether authority, that is the sign this concern authority have signed on that one or not. By seeing that one, you will get to know this transaction is authorized or not. If any sign is missing and payment has been made, means you have to think this transaction is fictitious transaction, and you have to by doing that one, you will find out fictitious transaction or fraud transaction which is done, which is happening in your books of account. And also another objective is to find that only the books business transaction are recorded. That is, by checking each and every transaction, you will get to know whether this transaction is personal or business. If it is personal, means you have to deduct that one, you have to separate that one. By separating that one, you will get true and real figure of your profit and loss account. That is a statement, you will get a true financial statement of your business if you separate your personal or that is drawing from your business. That's how this these are all the main objectives comes under coaching. Apart from this, we also discussed in previous class importance of watching. First will be important under importance of watching. First will be watching is backbone of auditing. Why this watching is known as backbone of auditing? Because it detects errors and fraud. It detects error and fraud. What is auditing? Like previously we have seen, that is auditing is checking books of account to know accurate figure, to know the accuracy of books of account. By how you will get accuracy means by doing this watching, you will detect, you will eliminate any errors and fraud. If by elimination of errors and fraud, you will get true and fairness of your financial statement. Because of that one, this watching is known as backbone of auditing. Then next will be watching is essential of auditing, that is essential elements of auditing. Why? Because under watching, each and every transaction is this examined by keeping documents as base. So while verifying each and every documents, you have to see whether concerned authority have signed on that one or not, whether the transaction are real or not. That is because an editor may include fictitious transaction to commit fraud. So while doing this watching, you will detect fraud, you will detect errors. So watching is essential elements of auditing. Then watching is important to see whether evidence are correct or not. That is, maybe auditor have presented duplicate voucher. Okay, auditor have accountant have presented duplicate voucher. By doing this watching, you will get to know whether this voucher are true or not by checking the evidence. Okay, by checking with concern authority, that is sign what they have made, that is they have made, or it is duplicate sign. By doing that one, they will get to know if any fictitious transaction have been made, if any duplicate watching has been made. They will if any duplicate watching has been made, they will detect that one, and they will get to know this true and fair view of business. So watching is important to see whether evidence are true or not. These are all the importance comes under watching. That is what are the principle have to be kept in mind while doing watching. That is, arrange voucher. In books of account, the voucher is based on entry. A voucher is helpful to support any transaction which may be cash, memo, fill, okay, voucher, ticket, or other. So arrange voucher have to be made. If arrange voucher is there, means you can easily verify each and every transaction with help of documents. You can verify. Otherwise, what you have to do? Okay, the voucher has been as based on entries only. Okay, so while checking entries, if arrange voucher, the management have to, this accountant have to arrange documents based on dates. he have to based on dates, that is chronological order we will make, no, that is by day he have to make. So it is easier for auditor to examine these books of account. Then next will can vouching date, that is voucher date can be also check whether the transaction what they have made, whether it is while comparing that one you will get to know whether which one is real or not, that is the future as well as the last previous year. If you have, if accountant have recorded that type of transaction means you have to erase that one. Okay, if any voucher relates to future or else previous year, if they have write that one and they have made that entry means you have to erase that one from your financial statement, so that you will get true figure of your business. Then checking of authority, that is you have to check properly sign, okay, proper authority sign of them, that is on that day who have signed, that all documents you have to check. For the approval of dealing, the owner of management must put signature for approval of dealing. If voucher or without signature of proper authority, they have not considered as fraud. That is, if you don't have, if you don't get any sign signature of management means you have to assume that this is fictitious and this is duplicate voucher. So if authority, okay, authority sign has been made means then only you have to approve that transaction. Then cutting or changes, that is if voucher is there, but under voucher sign is also there, okay, authority sign is also there, but the cutting and changes is made has been made on this one by date, maybe the date will be today 18th this June means they have converted into 18 October, like that. Okay, the maybe they have a change date, that is 18th June means 28th June, maybe 18 June means 8 June, like that. If they have made any correction by doing that one, if if you caught any voucher means it have to be rejected. So these changes can't be acceptable till the approval authority have signed for that one also. If any change has been made on vouching, by doing that one, okay, once it is right means if you alter that one means it is easily identified. If any alter have been made on vouching means for that one also you have to get signed, then only the that type of vouching is acceptable by auditor. Then compare the word sign figure, that is the while paying supplier, the amount is in words they have written 10,000 but amount showing 1 lakh rupees. That also you have to check whether by doing that one any fraud activities are doing or not. You have to check figures with the words whether both are same or not. This is also one of the principle which have to check. Transaction must relate to business, that is auditor also have to check whether the documents what he have, that is physical evidence, that is voucher what he have, whether this is relating to business or not. If it is not, then voucher are not acceptable and doubtful. Okay, if it is not, then you have to reject that one. You don't have to accept. If it is not relating to business means you have to reject that one. If it is name, okay, suppose the voucher must be in name of business and also the management. If apart from them, if any employees, the bill is passed with any employee's name means you have to reject that one. Then case of personal voucher, that is like I have said above, the auditor should not accept the voucher in personal name. If accountant have passed bill on his own name, in that situation you have to reject. That is, there is a chance that the officer of the company has purchased any item in his personal capacity, so you don't have to accept that one because this is relating to personal transaction, it is not relating to business, so you have to reject. Then apart from that, we also have checking of accounts head. Auditor must be satisfied about the head of accounts in which cash is deposited and drawn. He should examine the documents evidence in this regard. That is, he have to check accounts head. That is where account is deposited and how much it is drawn. He have to check the cash, whether it is matching documents evidence or not. That is also one of the work. Then principle, another principle is revenue stock. If the transaction is made more than 20 rupees means for that one they have to be voucher. If voucher is not there, means the transaction you don't have to consider. If any transaction is made above 20 rupees, means you have to the evidence have to be made, the voucher have to be made. That is voucher, that is stamp is there, no? Each and every company have a stamp, that is you have to see whether stamp on voucher the stamp is there or not, that also you have to check. Then case of cancel voucher, the auditor should not accept the cancel voucher because it has already served the purpose of payment. There will be a danger of double payment if it is accepted. That is after once the transaction is over, they will cancel that voucher. If any cancel voucher or any cross mark is there, that is already done or paid, that type of transaction he have to reject, because maybe or this accountant have played role, because already have paid 50,000 to supplier, again by showing same physical evidence he is paying another 10, that is he will keep that 50,000, maybe that fraud will occur. So in that case the auditor have to be very careful, and if any cancel voucher is there, he have to reject that one. Then important notes: for finding the correct decision, the auditor can also take help from working paper of previous year and other paper or notes relating to business and available with the management. That is, you have to check whether if any correction has been made, okay, by with concern with the management, means you have to do that one. That is by keeping a previous year paper, how transaction is recorded in this business. By keeping that one, you have to check whether they are if anything he have seen this is not relating to this business, or you have passed, means he have to check previous year paper as well as management decision, so he will get to know whether they have management only passed this type of transaction or not with personal name, that also he have to check. Then minutes weeks, that is if while this one shareholder meeting or director meeting, they will decide resolution or decision, if they have passed anything, means he have to check that one, whether all, by checking that one he also have to check whether all department are following that one, whether the department, the decision what they have made, that is resolution what they have passed, that is shareholder and director of company, whether what they have passed, that is resolution as well as decision, whether it is implemented in business, that is whether it is implemented in the books of account or not. That is maybe PF, it is maybe they will decide we will in salary only we will pay 10% increment to each and every one. He have to whether this type of decision has been passed, means you have to check whether this accountant have passed same, that is he have passed 10% to everyone or not, that all everything, okay, maybe other decision also you have to consider along with resolution. You have to check this main notebooks, okay, you have to consider this whether in under business they have implemented this and this department are following that decision and resolution or not. You have to check that one too. Then by law, in case of company, the article and association and memorandum, that is article of memorandum, that is memorandum, that both have to be checked by auditor. It is by keeping that one, he will get to know how this company is working. By keeping that as base, he will get to know how this company will work. So if anything is made, okay, by keeping that one, okay, but on other hand, in society and clubs, they follow laws or used to be determine the power of management, that is how much power have to be made for management or a shareholder, that is director, who is acting director, everything they have passed, okay, in article of association, that is AOA and AOA, under that one MOA, okay, under that one he have to by keeping that one, he have to check whether business are following that one, that is already the auditor goes through the rules and regulation to find a true and fair value there, that is the company is following same what they have mentioned under AOA and MOA, that he have to check and he have to verify that one too, along with the transaction. And then agreement, if any agreement is made, okay, prior maybe future agreement is made, okay, maybe relating to purchase or lease agreement is made, no, that also you have to check. Well, that is auditor must examine all related paper of business such as agreement, correspondence and other, the basic information can be received by auditor from such paper. that is during agreement here, they, if you have borrowed loan from bank, means you have to check agreement between them, that is how much percentage you have to pay to bank, that is interest rate, whether it is 14 or 12. By checking agreement only, he will get to know how much you have to pay to that bank, and dividend how much they have to, that in decision of while checking here minors, here they will get to know how much dividend have to be made to, in board of director and shareholder meeting only they will decide, no, how much percentage of dividend we have to share, and how much we have to retain. That also you have to consider whether accountant are following that decision or not, under company they are following same as they have decided under meeting or not. That also they have to see. That is while checking this agreement, he will get to know how much they have to pay to is series lender, how much they have to pay, that is interest how much they have to pay, that he will get to know by checking this agreement. Later on he have to check based on, by keeping this as a base, this one is documents, okay, by keeping this agreement as a base you have to check books of accounts. Then deed of mortgage, that is like earlier only I have said, no, if before the sale or purchase of any asset, if you have made any contract, that is agreement, if you have made any agreement, means that also you have to check. This auditor also have to check if the agreement is made for loan against the immovable property, then the mortgage deed is signed. It is compulsory for auditor to study the content of deed, that is in previous only seen, no, that is how much percentage of interest you have to pay for how much amount you are purchasing that building, or how much for how much amount you are selling that one property, that all everything, land for how much amount you are selling that land, that all detail regarding that one you have to check by keeping deed. Okay, you have to keep, this one is just like agreement. Okay, by agreement such as that paper only it will come. By keeping that as a base, auditor have to check whether that type of transaction is pass, whether it is true or not, whether figures are true, whether it is matching with deed or not, that also he have to examine. Then maybe that's it. We will discuss in later on class. That's much from today's class.